The International Monetary Fund is now predicting a brighter economic outlook for China in 2020. The revised expected growth rate of 6%, up from 5.8% just 3 months ago, follows the Phase 1 trade deal signed by China and the U.S. on January 15th. Meantime, the IMF now predicts that global growth will reach 3.3% in 2020, which is actually 0.1% lower than its earlier estimate. So, what's behind these new IMF figures? What's the general direction of China's economy? To what degree does China continue to drive the global economy? Joining us here in Beijing is Professor Gong of the University of International Business and Economics, and also Mr. Edward Lehman, Managing Director of the law firm Lehman, Lee & Xu LLP. Thank you for coming, as always. So this latest IMF figure predicts that China will grow by 6% in 2020. That's a slight increase from the prediction that they gave a little earlier. How significant, though, is the 0.2% increase?
That's a very large number, actually, for such a large economy. The world's second largest economy, about $14 trillion of economy. 0.2% is a very significant number. However, this prediction, even though it's revised upwards, still is a reduced rate compared to this year. This year we have 6.1%. IMF is predicting 6%. As a matter of fact, I'm a little bit I won't say skeptical, but I'm a little bit concerned that we are able to reach this figure by the end of this year. I think it's a tall order in the first place. And you can see that even though we have reached the Phase 1 deal with the United States, but bulk of the tariffs are still in place. And until these tariffs are rolled back, I think it's not going to materially change the export and import picture between the two countries. In addition, we had a very bad beginning, as we are seeing right now, and that's going to take a toll on our economy. This pandemic, it's going to affect all kinds of economic activities. People are canceling flights, people are canceling hotels, people are not going to the movies, they're not going to the shopping malls, they're canceling the Spring Festival big feasts. All these things are taking tolls on the economy. So I think the first quarter number is not going to be good. So I'm a little bit concerned about whether we're going to be able to reach the 6% objective. I think our government's objective is also about 6%.
Yeah, they are pretty in line with China's plan, but where do you stand on this assessment by IMF? Do you share the same kind of concern with Professor Gong?
I'm not probably as frightened about the whole outlook. As a matter of fact, I mean, when the optics are, everything's always getting worse, and we have a 24-hour news cycle that's powered by the social media and all kinds of folks out there saying whatever they're saying, the sky's falling, or the rumors of my death are greatly exaggerated. And what's happened actually is, if you look at all the advanced economies, those numbers, I think that the growth rate is 3 times of China that's reflected is 3 times that in China. The growth rate in China of this year is what they're predicting of advanced economies, and this is a very large economy. And the one thing that I can always say about China is it never ceases to surprise me. No one ever went broke really trying to anticipate what great things China could do and have done. So I mean, I agree and understand with everything that's being said on a real micro issue. I always have a little bit of a problem with IMF. I've actually been through the report. Gong has written papers on the report. It's a whole lot of nothing, and then they come up with these numbers at the end. I mean, it would be the way I would summarize it to the lay person. So I'm not as negative on the whole thing as everybody else is, generally speaking.
And 6% is still an incredibly strong economic growth for China to maintain.
Oh yeah. Well, I mean, in general, the developing countries usually go a little bit faster. The stars of the economy right now are these West African economies, places where you've never heard of. The small countries, Rwanda, for example, Cote d'Ivoire, these countries, they are having a growth rate higher than China, 7%, 8%. Ethiopia is doing very well. I mean, if you look at the IMF reports, all the big economies are not doing so well. United States, IMF's projection is that's going to be reduced growth rate compared to 2019. Right. Third largest economy, Japan, is experiencing the same thing. Europe is also revised downwards. So, all these big economies are not doing so well. The economies that are pulling the whole thing upwards are those what I call the little economy, less weighty economies. African countries, some countries in Asia, Southeast Asia, and Southern Asia. Turkey is recovering. Russia's doing quite well these days, surprisingly. So, all these economies are doing so well. But the developed world, as well as what China is regarded as a locomotive, right? 30% of the growth is coming from China. 30% of the world growth is coming from China. They're also reducing the growth rates are coming down actually. So it's an interesting year for 2020.
Right. And just to follow on what John Gong was saying, you were saying what was 0.2 represents how much, John? How much 0.2 growth represents how much approximately?
I mean, 0.2% times $14 trillion. I mean,
right.
That's 1.4 trillion, 140. So it's about $300 billion of economy. So it's a very significant number.
Right. And just so people can understand, even a trillion. I mean, if a trillion seconds is 31 years. Time. If it was seconds, we're a dollar. I mean, essentially. So I mean, we're talking about some very big numbers with regards to that. Again, that's why I think everyone focuses on the negative thing. It's 3 times that of the advanced countries. Okay, so 6% is about 3 times that. So we're always focusing on the negative stuff about China. I think we need to go into the positive things and what can be done and what will be done. And China continues to surprise.
Now, the IMF also puts China's growth rate in 2021, that's a year from now, at 5.8%. I think that figure will be the first time it dropped below 6%.
Well, I mean, this is actually a gross trend that's very difficult to fight against. I mean, ever since 2014, China's growth rate has been coming down. And this is very natural because we're getting so big, right? Today, maintaining a 6% growth rate is very, very different compared to, say, 10% growth 20 years ago. Back then, we're much smaller. 10% is not much of a big deal. Today, we're the second largest, 14 trillion, right? So it's a huge economy. I mean, like 6-7% a year growth is creating almost like the size of our Australian economy in 1 year. So and China's per capita GDP is also been rising. So China is clearly moving from the developing country camp towards the developed country camp. And in that process, growth rate is going to come down. Average growth rate in a developed world is somewhere between 1-2%. If you have something over 2%, close to 3%, it's considered a very good year. Look at Japan. Japan has been hovering around a little bit over 0% for decades. So we're actually moving more and more towards that part of the world. So it's not surprising, and it's also not that unexpected that China's growth rate is going to keep coming down. But even having said that, 5.8% is still very good. I mean, 5 as you have mentioned, right? 5-6% is a very, very good number. And I think,
there will be critics talking about the danger of the danger of politically or economically of a slowing economy. Yeah,
I mean, and this is where I have problems. And again, having taken economic classes, having opined on economy for a long, long time, and this is where I have a problem. Is a lot of times when you're saying bad news, then there's a knock-on effect. And there's something called the Trump effect. I mean, with regards to the economy, how much of that is him being like cheerleader in chief that's helping out the economy? And when you start painting a bad picture, then it is. I mean, to misquote Yogi Berra, I mean, the problem with predictions is they're really difficult, especially about the future. And meaning that, in essence, that what they're saying today is it's like every army is ready for the war that they is ready to compete in the war that they just fought. What I'm talking about is we can't really predict where things are going to go. I mean, the one thing I can say is China's looking at the growth in Internet of Things, in blockchain, in intellectual property, and that's where they're going to get the greatest bump, and we don't know what that pertains to at this point in time. And folks that are projecting out don't figure that part in. I also think that there's going to be a growth in the services sector and the financial services sector. The one thing that China can do is move very rapidly. I mean, and make a very quick decision or make an experiment and then turn around in a very short period of time. So, I mean, that's the outlook, but time will tell as to what the outcome will be.
And as we speak, the World Economic Forum is taking place in Davos with climate change issues one of the focal points. How do you think climate issues will shape global economy?
Well, as China's economy developed more into the developed camp, I think the world opinion's expectation of China meeting the climate change commitment is going to be much, much higher. So, China is and still is the manufacturing center of the world. So manufacturing means that we are emitting a lot of pollution. And I think we have to change that. So I think there's going to be increased political pressure, public opinion pressure on Chinese government to maintain our commitments at the climate accord and really implement these commitments. And I think that's a quite challenge. And we need to transition our economy more and more towards sort of a R&D economy, innovation economy, and a service-oriented economy. And these are the things that we have to do. So in that sense, I think that's a big challenge, and we have to do a good job about this. Otherwise, China is going to be pointed again by everyone in Paris.
Edward?
Yeah, I mean, just following up on it, China is the largest investor in green bonds. China's actually designated areas, as green areas, even within Beijing. I think it's Pinggu, and there's some other places within and around in Hebei. So, and they're actually underdoing education at a very young age. I mean, and they are signed on to all the international treaties. The other thing is that. What they've done is, I mean, even things I've seen on United States television, which is they've banned all plastic bags for, for everybody, and they're making big efforts. So, I think China's really on board with it, and with both feet. And I think the United States is a bit wobbly by comparison, for example. So, we'll take a look at that. But I think China with green is making sense and make money as well.
Is China transforming its economy to mitigate the worst impact of climate change?
Yeah, well, we're trying to. I mean, let's look at what's happening in Beijing. Several years ago, there's a big fog here. Everybody's complaining about it. But look at it. How much of a big improvement we've made so far. Nobody's complaining about air quality in Beijing. Winter, at least not as much as it used to be 3, 4, 5 years ago, right? But that's a very big achievement within such a short period of time. And I think that testifies to how much determined this government is in committing to these, changing these things, and also how the government is able to mobilize all kinds of resources to get things accomplished. And I think that's something to be laudable.
All right. Thank you very much for sharing your thoughts for the global economic outlook and also China's outlook for the next year. Now is Professor Gong joining us here in Beijing studio, and also Edward Lehman, Managing Director of the law firm Lehman LLP. And that does it for this edition of The Point. As always, follow us on Facebook, Twitter, using the handle The Point with LX. Download the CGTN app to watch our show on your mobile devices, or go to YouTube and look for CGTN The Point. Thank you for watching. You've got The Point.